looking for positivity or looking for encouragement. Temia Brinson aims to educate you, to give you the push to believe, to have the mindset for success. Mindset for success. To have the mindset for success. To have the mindset for success.
Tonight we have a very informative show for you. We have our special guest, John Burnett. He is the founder and managing director at One Empire Group. He's also an author and business commentator with appearances on CNN, Bloomberg, and Fox Business.
These are just examples, right? So if I were, besides these examples that I just gave, I think from an investor mindset, think about companies and industries that have pricing power. Because those industries that can pass those the higher cost onto consumers without losing demand, right? Hence,
Right.
That's pricing power. They will stand to do well in an inflationary environment. But we all know, bulls make money, bears make money, but pigs get slaughtered. So you can't be too greedy and stay married to certain investments.
Right.
At the end of the inflationary environment, whenever that is, right?
Yeah.
So you have to pay attention to the signs when things start leveling off at some point in time in the future, then you rebalance again and possibly go to more growth. If growth is within your investment objectives, start rebalancing again and possibly investing into more stocks than income generating investments.
Okay, yeah. You sound like Warren Buffett, because I was doing research because the stock market has shifted. So I'm shifting my portfolio. I've been doing ETFs lately. So, and getting out of stocks. So,
ETFs is a better way to enter a market. So for an example, for perfect example, right? The average investor probably will not be approved for a commodities trading account. Why? Because it's highly volatile, like you said.
yeah.
It's high risk. It's even higher risk than your options, right? So the chances of people walking in, opening a commodities account is like close to zero. But investors can actually start looking and searching out ETFs that invest and focus in the commodities market. So let's just say, hypothetical, an ETF that invests in cattle and orange, you're in Florida, orange juice futures, right?
Yeah.
And other commodities. So they invest into a basket of commodities for you, where you're not investing directly buying the orange juice or the cattle contracts. You're investing into an ETF that is doing all the investment decisions for you, and you're buying a share of that. And again, there's no guarantee of return, but that is just a consideration for the average investor to consider getting in on the action, so to speak.
Okay. And they're diversified. That's what I like about that.
Absolutely. So those are some good thoughts for your viewers.
But yeah, when I said you sound like Warren Buffett, because when the stock market was changing, I had to shift. So I shifted to ETF. But when I was doing research, and yesterday it came out an article with Warren Buffett and his tips on how to beat inflation. And one of the
Right.
things he said is what you said: is pick companies that are able to pass on that inflation, and or that that higher amount, pass that on to the consumer.
Right.
And
Right.
I was like, oh, okay. But
Yeah.
uh,
That's just basic understanding of Wall Street, of general investments, right? And the key is, I look at money and investing as a relationship, right? And I'm not trying to say people should get a divorce or stay with who you got. I'm just saying I view money like a relationship, right? So in a relationship, you should be growing to benefit yourself and your partner, right? You don't stay the same.
right.
You adapt.
Mhm.
You be open to change.
Right.
People that are not open to change in relationships, usually that relationship goes south, becomes miserable. It's the
Right.
same thing with money and investments. Nothing stay the same forever.
Right.
You have to constantly evaluate, tweak, and make sure you're treating your money right.
Yes. Okay. I know.
Why? Because it's a money relationship.
Hmm. Okay, now John, another thing he said, this is what I want to ask you because I didn't know. He said that one of the things you want to look at is investing in TIPS, Treasury inflation protected securities. What is that? Because I
So,
have to research, I don't understand what it is.
okay, look, if you don't like risk, and and your goal is just to try to beat inflation, and you're not trying to make money, then go with that, right? That's something that's something that that's for conservative investors that are not looking for risk. And honestly, to me, I don't think you're just that person that just wants to keep pace with inflation. Because if you just keep pace with inflation, right, and not fall behind inflation, then you're really just par. And
Yeah,
I see you as above average.
I want to
I
beat
see,
inflation.
and I know your viewers want to know how do you win in the money game,
Right.
right? So tips. I don't think that's the way to go if you want to not just beat inflation, but actually get a decent return above inflation.
Okay.
Tips are really for people that are uber conservative.
Oh, well, I
That
guess that he was talking about just keeping his money there so it can be semi-safe, a little safe.
yeah. Okay, so maybe when you're looking at a balanced portfolio, if you have stocks and other income generating vehicles, maybe put 10% or so, by way of example, into tips, right? But in terms of going 50% in that or 100%,
Oh.
let's pump the brakes a little bit on that one.
Oh my goodness.
We'll be right back right after this break. Let's continue with our discussion.
Now, what about gold? Because again, I did my research on that, and it's a lot of analysts say gold.
Well,
But Warren Buffett, in the article today, he was like, "Man, I'm not feeling gold." And I actually had a couple options in gold, and it didn't move at all. So I'm kind of with Warren Buffett on this one. What about
well,
gold?
again, I mean, gold is a safe haven, so to speak, when compared to, let's say, the currency and interest rates and things of that nature. But gold doesn't pay a dividend,
No, it doesn't.
right? So you're just relying on and hoping that gold appreciates, right?
Yeah, it
Fast,
doesn't. Right now, it's not moving at all.
right? It could move in the future, right? And I'm not saying gold is a bad investment. It's a good historical hedge,
Okay.
right, in an inflationary market. But for the average investor, I'd say stick with the other things that you might have a little bit more insight. Especially, we're all consumers, right?
Yeah.
We know what goods generally have the same price level during a booming economy or downturn, right? Hence, going back to that pricing power.
Okay, so basically, I mean, it's good. I mean, right now, if you want to keep your money, that's a steady pace. But if you want to beat inflation, probably need to go commodities towards consumer goods, product goods.
I'd say ETFs, because commodities are very high risk,
Yeah,
and so I wouldn't suggest investing into it directly. But I think there are certain investment vehicles like ETFs or trust, in general, that you can buy units or shares in to get a piece of the pie, so to speak, of a basket of different commodities that will or have or will continue to experience higher pricing power as we move through this inflationary period.
now I've been seeing chatter. I guess I put it like that. I've been seeing chatter on social media about cryptocurrency, and I dabbled
Oh
a
boy.
little bit. I dabbled a little bit of concern about is people who's putting a whole bunch of money into cryptocurrency because they're not making the same money that they were making before months earlier on stocks.
Right.
So
Well,
we talked about alternatives that how to shift, but they're shifting to crypto at a large amount, and I'm kind of worried about that.
it's kind of interesting, right? So it was initially thought to be that cryptocurrencies would be. I don't want to say it's not exactly like gold, but I'm just saying, using the analogy that it was thought to be a safe haven
Right.
against the dollar,
Mhm.
and would actually yield a higher return in an inflationary market. However, we're seeing that it's pulling back,
Right. Right.
because if that were true, what I just said, technically it should be inching higher.
Mhm.
Now, what are some of the drawbacks? Well, when you have countries like Turkey and Turkey saying that, hey, banning it, right? And then you have uh, uh, a country like China launching its own digital currency,
Right. Okay.
the chances are like, whoa, okay, what is the future of some of these existing digital currencies? And I'm not saying it's dead. I'm not saying not to invest. I'm not saying you should invest. What I'm saying is it's too early to tell
Okay.
where digital currency is going because even the U.S. government and some state legislatures, right, are contemplating how it should be regulated.
No, right?
And any discussion about regulation does not boost a stock, right, or an investment. So there's a lot. There's this huge cloud hanging over digital currency. So I would say, look, you probably have a better chance at sticking to what you actually know
Right.
and what you can actually assess, right? We can assess groceries. We can assess, general trends in consumer buying and looking at the price levels and making an informed decision.
Well, that's good to know because I mean, I kind of worry. I even had a screenshot. I just saved a screenshot of somebody um, screenshotting their account and how much they put like 60,000 into
Woo!
a lot of people put into Bitcoin and they lost it because it's like it went up to like 65,000 and now I think it's like 31, 32. So
See
I
the,
mean,
see
it's
the,
not a good shift from inflation. I know they're looking for a way, to beat inflation, but crypto is not. I say maybe like me, probably 10 or 15%, because
so look. So a lot of these news stories about investments, um, they're opinions. They're not facts.
right,
Some people were saying that okay, Bitcoin could reach $100,000 and possibly $400,000 in a couple of years. That might be true. I don't
yeah,
know.
I think,
Nobody knows.
but
But
not
but
overnight,
but it could also pull back, right?
right,
So just because there might be an opinion that it might go to 100,000 and possibly 400,000 in a couple of years, people see that and say, "Okay, I'm cashing all in."
yeah,
No, you can't. That's not. Look, this is not Vegas, people.
right, yes, that's what I'm worried about, and they don't have a concept. Seems like this new wave of investors have a different concept. Like their concept is diversified portfolio. It seems like they don't understand that.
Well, they
And it's
don't understand diversification, and they don't understand risk. And I think it's more hope than than making an informed decision. You don't invest on hope.
yeah,
You invest on good information and analysis and
right.
understanding of markets.
We'll be right back right after this break. And now, let's continue with our discussion.
Well, I mean, we think about this is another one. Let me see, because Warren Buffett. Did you read the art? Did you see the article? Did you come across it
What article?
with Warren Buffett? I think it was in C. Only for financial news. I only do CNBC or Fox Business. So I
Okay.
think it's CNBC, and it was like a whole list of what he wanted of how you get inflation. So he said instead of going for gold, um, go for productive assets such as stocks where companies send the inflation over to the consumer. Also, real estate. We
Yeah.
talked about
Well, that's pricing power.
pricing power. Okay, and then farmland that can generate, like you said, dividends, income, or food to the owners. So, and he said,
Right.
you
And
also
gold doesn't give you a dividend. That's why while it might be safe according to some, it's not ideal if you want to really outpace inflation and also get alpha returns.
Right. And then also, one of the other things is what you was right on about the traditional bonds. Don't do traditional bonds, but you gave me an idea about municipal bonds. So you
I
can
mean,
get that.
you could do high grade corporate bonds. So let's just say
I
if
mean,
a
can you
company,
trust that doing that right now?
well, nothing is guaranteed, but let's just say, right? Let's look at the concert of all these different instruments that we talked about, right? And see what harmony can we find through all of these instruments. So let's just say there's a company that has a decent credit rating. It doesn't require a lot of capital, additional capital. So they have low capital needs. They have great cash flow, and they have a good cash balance on the balance sheet, right? So I would think that those companies, their bonds would be very attractive
Those come. Okay, yeah, I see.
because they're lower risk and the yield is attractive.
Right. Okay. Yeah, I'm gonna have to look into that.
But you kicked it off with these junk bonds that probably have high capital needs,
In my reading, okay.
low cash levels on their balance sheet, and they're paying this huge dividend, right, or interest payment, right? I should say, and people are going to chase that interest payment and not looking at the risk level and the
Right.
capital needs. Conversely, I'm saying look at companies with a decent and respectable investment grade, lower capital needs, good balance sheet in terms of cash, right? Good turnover in terms of inventory. And hey, that might be a good investment grade bond in addition to municipal bonds.
Okay. Wow. Okay, well, we have a lot of alternatives now to what we
Yeah.
were doing before with the stocks. Um, I mean, yeah, it's important to go back and review, and because, like I said, I had to shift. So I
Yeah,
got.
everyone should be open to shifting. Why? Going back to the money relationship, right?
Right.
And also, I think um, look at what happened in whether you look at the market downturn shortly after the year 2000, after that Y2K, and also after 9/11. Then if you also look at the market after the collapse of 2008, right? What did people really do during that time period, right? Where jobs were not as stable, or even if you were in a stable job, you were trying to think about your future, right? Your upward mobility. And what a lot of people did, they said, okay, I think I'm okay, right? I think I'm safe, but I think I should invest into myself.
Yeah.
So they should be viewing this time period similarly, right? To say, you know what? If I want to really outpace inflation and really set myself up to do well in the future, why not invest in yourself?
Right.
Maybe if you don't have a degree, maybe go back to school. If you already have a degree or you don't have a degree, and there's some skill sets, right, that you need to hone, why not take some courses, right?
Yes.
Professional study courses to hone your skills. So that way during the inflationary period, after you finish these courses, and possibly after things subside, you'll be more equipped to what? Sell your labor to the market.
Right, right.
At a higher price that gets you a better return, making more money, hence outpacing inflation, because that additional money that you make, right, you could save and invest more.
Right. Instead of inflating up your money and you're not able to invest like you did before.
Or pay down debt, right?
Yeah.
Right?
Yeah.
Because the interest on people's credit cards will also go higher in an inflationary market. So the cost of money is going to go up. So you'll actually be paying more. So you should be paying down debt in all forms of debt obligations that you might have to reduce paying more money. Reduce your outflows, both in principal as well as interest, as well as investing into yourself, right? So that way you can, in hopes of generating more income in the future.
All right. Well, you're right. You preaching. You are preaching to me. You step right into my life, okay? Oh my goodness. So, thank you for coming on, because I'm so needed this. It's not for me, but it's too, because again, I see a lot of people not really diversifying, and they're putting a lot of money into crypto because people don't know what to do in this time of inflation. So thank you for coming on and showing the shift really, and look at our portfolio.
And if I could say one more thing in closing, look at people's habits, right? So let's say going back more than a year ago, let's say March 2020, things were shutting down, right? People weren't going out, but people were working from home. And if you weren't working, you were getting a healthy check from your state and from the federal government.
Right.
So your people were locked down, didn't go out much. What are they going to do? They will still consume buying online and streaming. So it's very important to understand what is going on and how people are going to spend their money.
Right.
So if you look at all the streaming stocks, they went higher considerably, right? If you look at a lot of the primary online retailers, Amazon, Walmart, Target killed it.
Yeah.
Right, in terms of earnings. So again, apply the same thought process. Look at all of these instruments that we talked about and make music based upon the harmony and tune that fits your investment profile.
Wow. Okay. Well, John, I thank you for coming on, and you have really been a blessing because a lot of people don't have this education, and I'm grateful that you're here to provide.
Thanks for having me. Look forward to the next one.
To have the mindset for success. If you're looking for positivity,